Hey guys, welcome to Options 101, where I will be teaching you about options. We will be using the TD Ameritrade course as reference. If you're a beginner, this is the perfect video for you. I think if you are just hearing the term, it's not only important to know what it is, but to know exactly why people trade them. So in this video, I'm going to give a high-level overview of what an option is, but more importantly, why do we use them and what do we use them for? I'm going to break it down for you in very simple and basic terms. If you are intermediate or pro, this is a great refresher. But yeah, let's get started. Introducing options. Options are a challenging and exciting asset class. They can be used to pursue a number of goals. An investor may use options to potentially generate additional income or hedge a stock position. Meanwhile, a trader may use options for speculation. Learning about this has hurdles. They involve significant risks and it's not suitable for everyone. Some of the more complex strategies can carry substantial risk. In addition, options are a decaying asset that lose value over time and ultimately expire. And since options are derivative securities, the trading and pricing of options is inherently more complicated than stocks. So, to summarize, they can be used to generate additional income and hedge a stock position. And by hedging, what they mean is protecting yourself. It's basically insurance, and we'll dive into the minutiae of it later, but just for now, think of options as insurance. They are also a decaying asset. So like insurance, you can't just buy it once and then have it cover you forever. You need to constantly buy it every month, every year for a long time if you want it to stay in effect. So when we say options are a decaying asset, that means there's an expiration date. And as it gets closer to the expiration date, oftentimes it loses its value. And options are also a derivative security. So stocks are a security, and a derivative security means that it relies on something else. So while if you're trading stocks, you see the price, you understand this is the price of the stock. When you see options, the pricing is a lot more complicated because there's a lot of factors at play, including the price of the stock, other extrinsic factors. It's confusing. So this is also another reason why you shouldn't just jump into it without understanding what you're getting yourself into. Let's move on. This combination of complexity and risk can leave many investors confused or unprepared for the realities of options trading. So considering the hurdles and risks, why use options? There are several reasons. First, options can be used to help manage risk by serving as a hedge or take on little or a lot more risk by incorporating income or speculative strategies. Options can be traded when you think the price is moving up or moving down. So generally, if you think the price is moving up, we have an option called a call. And when you think the price is moving down, we have a type of option called a put. Just keep those two words in mind for now. We'll get more into detail about them later. This management of risk is what allows options to have many different uses. Options are generally used for three main purposes, and this point is key. You can either generate income, speculate, or hedge. You can generate income by selling options. Speculation requires putting those calls or puts when you're betting on the direction of a market and you think you have the potential to make a lot of money. That's speculation. And hedging, when you want to protect the price of a stock or you want to make sure you can still sell your stock at a certain price. That is hedging. These strategies typically allow you to define your level of risk and return. Next, like some other securities, options can also be used to place bullish, bearish, or even neutral trades. Therefore, options can be traded in all kinds of market conditions. Additionally, options can allow you to speculate on more than just changes in price. You can also speculate on changes in other factors like time and implied volatility. What this is saying is you can trade options and benefit them if you think the market is going up. You can trade options and benefit from them if you think it's going down, or even if the market is staying the same. Whatever your prediction is, there is a type of trade that you can do to capitalize it if you are correct. And more so than stock, again, like we said, because options is a derivative security, its worth is more of a black box when you compare it to stock. A few of the added factors that makes it different is time and implied volatility. So even those two variables you can trade on and make plays based on your understanding or prediction of whether those factors might change. Another important feature is that option strategies are highly versatile. There are a wide variety of strategies, each with its own risk-return ratio. For example, some strategies have very high risk and a high return potential, while others have limited risk and limited return potential. So this is one thing that really attracted me to options, is that unless you know how to do good technical analysis or you get lucky, you don't really know what your win ratio is. But when you're trading options, Robinhood actually has calculated win ratios for you in a period of time. You can find plays that literally say you have a 95% chance of winning. Now, of course, when your win ratio is so high, you're not guaranteed to win a lot of money. Oftentimes it's $1 or even less, but at least you know. And that's what makes it very enticing for novice traders with limited capital, because you have these plays that are safer. And again, there are also plays that are incredibly, incredibly dangerous. That's why you have places like Wall Street Bets, where they've made a culture into putting your whole life's work on the line just to make a bet and 10% chance to make millions of dollars. But I digress. Likewise, traders can customize these strategies to determine a probability of success that's right for them. That is so important. So it's up to you, your risk tolerance, how much money you have. You can create a strategy with a very, very high win ratio and you just want to get a little bit more money. You can create a strategy with a very low win ratio, but you have a chance of making a ton of money. Or you can find a balance between the two. As you might expect, strategies with high probabilities of success tend to have low potential returns, and strategies with low probabilities of success tend to have high potential returns. However, there is a wide variety of customization that can be done to create a balance that can meet your own needs. This is absolutely true. I'm still figuring that balance out myself. Because of their versatility, you can create option trades with varying risks, potential returns, and probabilities of success. Different traders use options for different purposes, but whatever they're used for, options are an active trading strategy. Because options have a built-in expiration and can be very risky, they should not be considered a passive investment. Active trading means you have to actively make moves. You can't just buy it and then hold it forever because they have an expiration date. There are options with expiration dates that are months, even years in advance, so they might not seem active initially, but because they still have an expiration date, at some point you need to make a move or else you will lose your money. A stock, on the other hand, you could potentially hold forever. As long as the company is still there, you don't have to touch it, but options is not the same. It's a contract with an expiration date, and it's very common for option traders to buy contracts that expire in a few days, weeks, or months, and those you need to keep a close eye on because the value of that contract can move very quickly. So you need to know how to manage them and when to take profit and when to cut losses. That's it for today. Hopefully you have a high level understanding of what an option actually is. And in the next video, we'll dive more into how they actually work. If that was helpful, please like and subscribe. There are going to be many, many more videos in this series. I think options are an amazing way to make some money, especially if you understand them. And it's fun too. It's fun to learn these new ways of investing and growing your income. Thank you so much for watching and stay tuned.